There is a persistent misconception in accounting that reconciliation is simply a matter of writing a script to match two identical rows of data. In practice, naive exact matching scripts fail almost immediately. When exposed to the reality of modern, high-volume accounting, where bank settlement delays and messy vendor data are the norm, these rigid scripts break down, flagging valid transactions as errors. True account reconciliation is a controlled process. It is engineered specifically to ensure the completeness of financial records and generate the evidence required for an audit. Artificial intelligence increases processing speed and matching accuracy, but its primary utility is structuring chaotic data. By handling the rote categorization, the AI allows human professionals to focus exclusively on explaining the variances. To build a functional AI reconciliation engine, it must be architected as a compliance framework first and a matching tool second. We are going to architect a complete, autonomous AI reconciliation agent from the ground up. This architecture relies on three pillars: data standardization, configurable matching logic, and mandatory human review gates. The AI agent executes the first two pillars to process data at scale, but the integrity of the system depends on the third pillar to generate a verifiable audit trail. This end-to-end mapping provides the structural evidence required to satisfy the strict controls of controllers and internal auditors. The workflow begins by ingesting disparate, raw financial datasets. This could be a bank feed compared against a general ledger, or a subledger versus a general ledger. The AI agent's first action is capturing metadata: upload time, user ID, and file name, creating a documented origin for the audit trail. Next, it initiates the standardization protocol. It unifies column names, standardizes date formats, aligns amount structures, and cleans text fields across both datasets. Normalizing this data is a requirement. Without it, downstream matching logic will generate a high volume of false variances based purely on formatting inconsistencies. Rigorous standardization eliminates that superficial noise, ensuring the engine only expends compute power on legitimate financial discrepancies. With the data standardized, we introduce the core mathematical mechanism of the matching engine, the full outer join. This database operation compares the sets and produces three distinct outputs: records unique to dataset A, records unique to dataset B, and the overlapping matched records. Utilizing a full outer join guarantees complete dataset preservation. It ensures that no orphaned transaction is left behind or hidden from the final report. To find those overlaps, we apply a three-layered joining protocol. The first layer uses direct keys. These execute exact one-to-one matches using unique shared identifiers, like transaction IDs or invoice numbers. When direct identifiers are missing, the engine falls back to the second layer, composite keys. Here, the AI links records by combining multiple variables together. For example, matching rows that share the exact date, amount, and vendor name. The final layer is fuzzy matching, an algorithm designed for parsing unstructured data. Fuzzy matching applies algorithmic similarity thresholds to find connections in messy, partial text. It can identify that Amazon Web Services in dataset A and AWS Inv 104 in dataset B represent the same economic event. This layered joining protocol creates a safety net, identifying complex transaction relationships that a basic database lookup would miss. When processing large-scale datasets, statistically, exact matching is impossible.
Operational friction guarantees that data points will drift. To resolve these expected discrepancies mathematically, we introduce configurable tolerance bounds. In this case study, we apply specific parameters: a date tolerance of plus or minus 2 to 3 days, and an amount tolerance of plus or minus $1. This logic addresses real-world accounting realities, primarily structural timing differences, like standard bank settlement delays that cause dates to misalign. Meanwhile, the amount tolerance resolves systemic rounding errors generated when two disparate software systems calculate decimals differently. There is a critical control constraint here. These tolerance parameters are not autonomous. To maintain audit integrity, they must be explicitly configured and approved by a human reviewer before the engine executes the match. By algorithmically forgiving this expected systemic friction, bounded tolerance isolates the true financial exceptions that require human investigation. Once the engine exhausts the exact, composite, and tolerance-bound criteria, a subset of data remains. The AI categorizes these failures. It isolates unmatched items, duplicate records, and low-confidence matches that hover just outside the tolerance bounds. The automated engine then packages these results into its final output, a standardized 6-tab draft reconciliation workbook. The raw, unjoined data streams captured by our initial full outer join directly populate the unmatched A and unmatched B tabs, preserving every orphaned record. The AI concludes its task by pre-populating the final tab with proposed journal entries, calculated entirely from the isolated exceptions it just categorized. The AI's technical role ends here. It has organized operational chaos into a structured draft, setting the stage for human intervention. The automated matching logic is a technical success, but it remains financially invalid until it is wrapped in a layer of documented human communication. The first control gate occurs before any matching begins. The system issues a start notification and requires configuration approval, signing off on matching keys and tolerance assumptions. The process then hits another lock at draft submission. The preparer emails the workbook and proposed entries, formally triggering the review phase. This initiates the reviewer feedback loop. Here, professionals apply their judgment to challenge the AI's assumptions, request supporting documentation, or demand clarification on specific anomalies. Any adjustment to the tolerances or matching assumptions happens strictly within this documented iterative loop. During the resubmission phase, the preparer updates the reconciliation file and revises their variance explanations based on the reviewer's challenges. This structured, mandatory communication loop is the mechanism that transforms raw data processing into verified accounting reality. We finally arrive at the final gate of the workflow, the explicit human approval step. Only upon receipt of the final approved communication does the system finalize the entries and prepare the posting file. The system then initiates a storage protocol. The approved reconciliation workbook, all supporting evidence, and the complete unalterable email thread are permanently locked into the database. Archiving this specific package guarantees readiness for internal controls, regulatory reviews, and external audits. AI provides the computational scale required to handle messy data, but it is the enforcement of mandatory, documented human oversight that ensures financial integrity.